Hey guys, welcome back to We Talk Money. I figured we could start today's show off with a survey. So yesterday I sent this out on the Twizzler, said, what is your go-to chart time frame? And I actually found it pretty interesting. Over half of people said the daily chart was like their main charting time frame. About a quarter said weekly or higher. Another quarter said 1 to 4 hours. And then some people were saying like 1 minute, 5 minute, kind of all over the place. But
day traders, huh?
Yeah, right. So what are y'all's go-to time frames for investing and trading?
The daily and the 2 minute. Those are my go-tos. 2 minute helps me pinpoint entry. Daily helps me find my setup.
2 minute, that's a pretty short time frame. What about you, Trav?
I'm more of a long-term investor than a trader, but most of my charts I probably pull up daily charts or weekly charts.
Yeah.
And I like to go back a couple years just to kind of get an idea of what's been going on, and I'll flag stuff like on the chart, like if there's been a major move over like a 5 or 10 year time frame, I go back and try to figure out what the hell happened.
Yeah. Yeah, I mean, basically what charts are is different zoom levels on price action, right? It doesn't matter if you're looking at a daily, a weekly, a 5 minute. It's just how zoomed into the immediate or distant past price action are you looking at. For me, I tend to go mostly off of the daily chart. So it's like every day is represented by one candlestick. And then for entries and exits and targets, I'll drill down to like the hourly chart to look at what's happening at a specific area if I'm looking to like get in or get out. And I guess you do something kind of similar. So you look at the daily chart for your setups and then a 2 minute for entries.
Yeah. Like if I see a setup on the daily chart and I'm ready to get in, but I want to kind of get a feel for what price action is doing that day. You know, are we going to see price continue to fall lower? Maybe I need to wait. I go to the 2 minute, and the 2 minute kind of tells me what's going on for that day, to where I can be like, okay, price looks weak on the 2 minute. So what I'm going to do is I'm going to wait a little bit longer. If this area breaks down, I'm going to hold off on my entry. And then who knows, we could see days more of, price tumbling lower and I get a better entry. Or if price looks really strong intraday on the 2 minute, then I know that my cue is, okay, momentum might be coming. Maybe I buy like a breakout on the 2 minute chart, like an intraday breakout. And that kind of guides me.
Yeah, because I think you can, on both stocks and crypto charts, you can find the major like support and resistance areas and like the trade setups on the daily. And then like when you zoom in, I guess it doesn't really matter if it's an hourly or a 2 minute or anything in between. If you're looking for like breaks of areas and volume to come in or like capitulation, key reversals, like you can really see those on the shorter term charts. Yeah. And if you're trading based off of the areas on the daily chart, that combination can be really powerful. Mm-hmm. Yeah.
You guys have really pretty charts in crypto because your markets trade 24/7.
Yeah. There's rarely gaps. Yeah. Except on the CME Bitcoin futures where you occasionally get a gap, but for the most part, it's just a
welcome
constant
to the world of stock traders who have gaps like every week.
Yeah. What's a stock that gaps a lot?
What's fun is, sorry, tangent, but SPE, I think we're going to talk about this SPAC, but I was going to buy the breakout on that SPAC and
SPC?
and it gapped, or SBE.
No,
SBE.
Oh wow, SPC.
Oh wow.
Virgin Galactic had a big gap up a couple days ago.
SPE kind of did the same thing. It was like this beautiful breakout chart, and I was like, I think I kind of want to get in on this action. And sure enough, I wake up and the damn thing gapped up so much, and then by that time, your risk reward is just messed up.
Yeah.
So that happens a lot.
That's why I like being a fundamental based investor.
I know.
I'll just buy stuff, but we have our own issues with that. But I like to, buy when I feel like the work's been done and it's a good price and the reward to risk is great. But because I don't want to wake up and see a stock up 50% that I've been doing a bunch of work on that I didn't buy any of yet. So
yeah. Well, no matter if it's stocks or crypto, the beautiful thing about price charts is price charts are truth. You've got the news, you've got opinions, you've got analysts, everybody's got an opinion about the markets. But when you look at price action, and if you know how to read the emotion and the order flow and what's happening, like you can remove all the BS and like really focus on the most important stuff, which is price.
Yes,
But
I knew there was a but coming.
But in the world of stocks, when you've got companies that turn out to be totally fraudulent, like Luckin Coffee, ticker symbol LK, which now it's probably LKQ.
LKQ,
Yeah.
Whatever.
Let's see if they got the Q on there.
Or no, it's L.
Yep.
No,
Well, that's actually a different company.
different.
Sorry. So LK, and then I do think
Are they even
type in LUCKIN.
are they even listed anymore?
Oh,
there they are. Oh.
LKNCY.
Oh.
Yeah, so this was
They're on
one where you'd be like, oh yeah, it's a real company, $30, $40 stock price. Oh yeah, you got momentum, and then all of a sudden, like 2 months later, it's a zero or near zero.
Goes from 25 to like 2.
Yeah, so that is the caveat there with stocks, is that you do have companies that can be worth zero that the market is mispricing for some amount of time.
Mm-hmm.
Yeah, no, that's a great point. I mean, the same as with crypto. Like, you have a lot of like BS, like altcoin ICO scam projects that moon. But when I say price is truth, what I mean is like that is the agreed upon opinions and the battle between buyers and sellers. And so if you're looking for momentum, if you're looking for key areas, there's no better way to find that than just looking at price and volume. Somebody asked me, I think in the comments on the survey, they were like, well, what are your favorite indicators? And for me, it's just price action, volume, and then maybe the 100 period and the 200 period moving average. By process of elimination over the past like 2 decades, I've looked at everything and I've gotten rid of everything because most indicators, they only confuse or contradict what you're looking at. It's very rare that you can slap an indicator on there that's actually going to add value over time.
Mm-hmm.
I agree. I am very simple in my technical analysis: price, volume, moving average. Boom, done. Like, okay, maybe RSI, maybe.
Yeah.
Like,
Do you put less stock in prices where the volume is drying up? Because like, you can't get a situation where like, is a price real if, it's only a price that's traded among like a handful of buyers and sellers, right?
Oh,
like,
for
like
sure.
Like in a parabolic top or on a, massive gap down after hours or something. Do you put stock in prices at those types of
or even like penny stocks that are very thinly traded, or micro cap cryptos? Like, I mean, the more liquid and the more diverse the market participant pool is, the better, right? That's why, like, when you look at Apple or Google, like who's in that, right? Well, it's a lot of algorithms, it's a lot of big funds and professionals, it's a lot of retail and Robinhood. It's diverse, and those are the best markets to trade.
yeah. I usually stay away from the low volume stuff. If I know that I'm going to end up in a situation where there's going to be, a bunch of slippage or a bunch of volatile price action based on just not having any demand at certain price levels, I'm not trying to mess with that.
Yeah.
I actually like on the long side sometimes, if I've done the fundamental research, I kind of like when a stock, it's already been selling off and then it just has this like low volume gap down where there's just a capitulation among, a few sellers who are just like, get me out of this stock. And I'm like, give me that stock. I want it. I want it at that price.
Yes.
It definitely depends on what you're trying to accomplish.
Yeah.
Yeah.
Well, and so to take that a step further, so in crypto, the nice thing is we actually have kind of a unique set of fundamental indicators or fundamental analysis, which is called on-chain metrics, where you can look at, there's a few different websites out here like Glassnode and Into the Block. And basically what these websites do is they offer different ways to quantify the fundamentals of Bitcoin and other cryptocurrencies. So one thing they look at is like basically market sentiment indicators, where you can see where, different market participants are either in the green or in the red. And so you can see down here, like on this Bitcoin chart, like back in early 2019, and then again in March of this year, when the markets panicked off, you can see areas of capitulation and where fears in the market, and also where there's euphoria. And so I've been spending a lot more time kind of looking at this type of stuff, even stuff like the stock to flow ratio, getting an idea of like multi-year Bitcoin profit targets just based on its future supply. This can be really valuable. Now, there's no guarantee that price is going to continue to follow this kind of exponential gain, but it does give you kind of a mental model on how to like look at future price potentials, and you can use that as kind of an additional way, in addition to just the price chart, to figure out like risk to reward and profit targets and things like that.
Absolutely. Makes sense to me.
Yeah. One thing that they recently showed, this was kind of making the rounds on social media, is the active entities on the Bitcoin network are actually breaching the 2017 highs. So what this means is they're trying to look at like unique market participants and the number of people that are actively either trading or using or investing in Bitcoin. And you'll notice that for you guys watching on the video, we actually broke recently this new all-time high. So that to me is a really, really bullish kind of, I guess you could call it fundamental indicator.
Mm-hmm.
So more active participants.
Yeah. Yeah. So right now we're seeing not only like growth in the number of people using Bitcoin and investing in Bitcoin, but also there's little things you can look at, like average transaction size. So if we kind of zoom in here, you'll notice that that's also been climbing. Like over the past few years, the average transaction size has been 25,000 or so. That's actually been about double or triple over the past 6 months or so.
Those institutional buyers coming in.
MicroStrategy.
Yeah, that's right.
Yeah.
Yeah, that's really, I think, a healthy sign. It kind of goes back to what we were talking about a few minutes ago too, which is, people focus on this all-time price high of Bitcoin of 20K or 21K back in, 2017, 2018.
Yep.
But not that many transactions were done at that all-time high. That was kind of a parabolic top in a frenzied market.
Yep.
So is that really the gauge that we should be using to determine, the health of Bitcoin and of the, the actual capital invested and the number of people who are in gains? And I don't think that that's the right metric to look at, because it can be deceiving.
No, this was only like a few weeks where Bitcoin went from like 8K to 20K, and then it very quickly came back down. That was just purely based on a speculative bubble, mom and pop investors chasing the high, thinking they're going to get rich. One thing that's really beautiful though is like right now, this is the third kind of major time that Bitcoin's gotten above 10K, and it's the longest that we've held above 10K.
I am a fan of this chart as a technical analysis user. I think this chart is super healthy looking. I'm not saying, I don't know what it's going to do, right? But just based on the technicals alone, what a pretty chart. And the longer that price stays at that 10K level, usually when we look at technicals, the longer price consolidates at highs or consolidates at a major area, that's usually a bullish signal.
Yeah.
So it's very interesting to me.
No, I agree. There's so many different ways to quantify price, meaning like different indicators, different fundamental metrics we can look at. But at the end of the day, if you just look at what's happening in the real world with, both on like the macro point with the Fed printing trillions and, all the stuff we've been talking about for several months now, I'm just more bullish on Bitcoin than ever before. And I've been in the space for a long time. So
I can tell you, I wouldn't want to be short that chart.
Yeah. It could definitely squeeze. And if you look at, so you've got a linear chart, which is kind of the regular way to look at price growth. But if you look at a logarithmic chart, which is kind of deceiving in a way, but what this does is it shows exponential gain really well. And you can see, just based on this alone, the chart is setting up for a massive potential squeeze.
I agree.
Yeah. So I don't know. We'll see what happens. There's so many variables in this, and obviously anything can happen. One market participant can, screw up a beautiful price chart.
Exactly, and not to mention with if the actual S&P or the Nasdaq, if our stock market crashes or sells off with basically anything, we got stimulus news, we got an election coming up, that could also push down Bitcoin as well. Yeah, absolutely. And taking a look at the stock market, so NASDAQ, as we talked about last week, was kind of basing out here around 10,800. Over the past couple of days, seen a little bit of a pop. Have there been any major changes, I guess, to the fundamental picture or even the technical picture since last week? I'm starting to feel like stimulus talks, we've been hearing more about that, and it's feeling, we were talking about this earlier, that we may get an agreement with the stimulus. Maybe. We're not holding I'm not holding my breath, but it definitely feels like things are starting to move a little bit there, and it feels more necessary. And if we do have positive news on that, I think that could hold the markets up. I don't know what your thoughts are on that, but
I'm kind of still of the mind. I think the market may need to force the parties to the table to get the deal done. We did see the Democrats come back this week with another 2.2 trillion. I almost said billion. It's crazy to think about
we're
their
in
numbers,
the teens
right?
now, Trav.
The trillions. 2.2 trillion package, which was just, a little bit slimmed down from the 3+ trillion package they had before. Republicans are way off that mark. They want something much smaller. So yes, we saw them kind of come back to the table with something, but not something that's going to get done. So I think what will have to perhaps happen is the market may need to force them back to the table to get a deal done in October. Now that assumes, though, that the economy doesn't kind of hit this exit velocity with the recovery again. A lot of mixed signals right now, a lot of mixed macro signals. We had a really strong consumer confidence number today. Don't know how much we should be really reading into that. On Friday, we get the non-farm payrolls, which is a jobs data for September. So it'll already be October, I guess, by the middle of the week, which is crazy to think about. But the September jobs data comes out on Friday. That can be a market moving number, and that can affect policy in a big way. So I'll be interested to see how that number trends, and then also how the market reacts to it. Because I think I'm not sure the fiscal stimulus gets done unless the market forces them to, meaning the market sells off again,
right,
and sells off pretty deeply in October. By the way,
so the plunge protection team needs to come to the rescue.
And the Fed has been pushing on the fiscal stimulus on the government.
They need them to take action. I mean,
yeah,
right? Like the Fed can only do so much from here. It's up to fiscal now.
Yep, the Fed's been kind of screaming at all of the government participants to get the thing done. And I think, if I am correct, the Senate and the House are not in session in October. So yeah, it could get weird in October with the markets. October is already a weird month for stock markets. Like it's tended to have high volatility. I mean, shoot, we had the 1987 crash in October.
Yeah.
But and also 2018, we saw October as the start of a really significant correction. So,
and we're 5 weeks out from the election?
Yeah,
that's right.
Yeah.
So this is going to be a really interesting October. The VIX is already a little bit elevated. We've got pretty high volatility expected in October already. So I'm thinking what might happen is we could get a sell-off in October if we see any weak economic data, and that may actually force the government participants to actually come back to the table to get it done.
So more buying opportunities then, or
potentially,
yeah.
Hopefully.
Yeah.
I mean, I guess my thought was that maybe the market was kind of popping from here on hopes that stimulus is going to come sooner than we think.
Yeah.
But obviously, nobody really knows. Do you think that maybe the government is dragging their feet on this, waiting for the economic data?
Yes, and I think it's political too. I mean, I think there's truth probably to the argument that on the Democratic side, they're probably not necessarily doing as much as they could to come to an agreement with Republicans, because they feel like it probably is in their best interest if we do get a market sell-off or some economic contraction going into an election
to make it look bad on Trump. Which if that is the case, I think that that's just horrible, because people need help right now. So that sucks if that is.
Yeah, and I'm just speculating. I could be wrong on that. I could be totally wrong on that. They are the ones coming to the table with a very large number to try to help people. At least that's what they say. So again, I don't know.
Yeah.
But my sense is that there may not be as much of a rush to actually compromise, given where we are with the elections a month out.
So I think the big lesson here is buy Bitcoin. Who knows, man? This is just such a strange time, and it's the most divided the country's ever been, and the most risk. I'm just like, okay, I'm just gonna buy Bitcoin.
Buy Bitcoin.
Yeah, buy Bitcoin. Have some gold too, maybe some land, a boat. I hear boats are great investments.
Definitely nothing wrong with a diversified portfolio.
We're kind of laughing about it, but I think you're exactly right. I think as far as sticking your neck out and taking broad equity market risk right now, that seems kind of suicidal. That's why I have pretty significant hedges still on. That's why we talk about having a diversified portfolio among crypto, metals, stocks. There's a lot. We're at a very pivotal moment right now, because if we do get a regime change, and right now the betting markets are saying that the odds are slightly better than 50% that the Democrats will get a sweep of not only the Senate and the House, not a sweep, but they will get control of the Senate and the House. And also Biden is slightly favored in prediction markets. So if you did get a Democratic sweep, then the policy changes that could come from that could be pretty monumental. Changes in tax rates, like we talked about last week. Changes in fiscal spending. We could get actually pretty large fiscal spending.
Healthcare.
Healthcare changes. We could get lots of different changes as far as policies. So, and the ability to actually get those packages done because you have control of both the House and the Senate. So very, very pivotal. And now if that doesn't happen, obviously then you could get a divided presidency and House, and that has a whole different set of implications. So anyway, it's a very pivotal time, like I said.
Yeah.
So get your cash ready.
Yeah. No, I think that's the lesson, right? Is like there's all these variables, there's all this uncertainty, and it's like we don't have to know what's going to happen.
Yeah.
We just have to be prepared to respond if something big happens.
Bingo.
And there's opportunity that comes out of that, right?
Exactly.
We're kind of like hunters, right? We're like chilling in the deer stand, just waiting. And like, we don't know when something's going to walk in front of us, but when it does, you take your gun out and you shoot it, right?
Yeah.
And as investors, you know, we're opportunists. We look for those pivotal moments where opportunity presents itself at a moment in time. Sometimes you have to act really fast. Sometimes you have weeks or months to respond. But you don't have to predict. You don't have to be right. You know?
That's right.
So
That's right.
Bring it on, correction. Bring it on.
let's go. Okay, so let's talk about some news and some questions that we've had submitted.
Absolutely.
Let's see. Okay, first thing up. What's this? The SEC is charging BMW with misleading retail sales, and this kind of blew up on FinTwit. What happened here, Nick?
Well, I think a lot of people were just angry because the SEC isn't going after Tesla.
So what? They're suing BMW, but they're giving Tesla the pass.
Yeah, and I think it's fair criticism. I mean, frankly, Tesla's had a lot of weird product announcements where they either didn't actually fulfill what they said they were going to do, or they pushed out timelines and they raised capital based on those statements. And so if you're going to hold companies accountable, then hold them accountable broadly, you know?
Yeah.
And so for them to go after one market participant is kind of weird. I also think the SEC's just been generally asleep at the wheel. There's tons of fraud in the U.S. markets that has been exposed, and they've done nothing.
What example? It's like the biggest, most egregious example.
Well, GSX, which is a multi-billion-dollar Chinese fraud. You know, if the SEC and Congress is so worried about all these Chinese companies like Luckin Coffee, which we just showed was not a total fraud, but at least broadly fraudulent in terms of its
Investors
financial
lost
metrics.
a lot of damn money.
Yeah, and
Yeah.
this has happened consistently with Chinese IPOs in the U.S. markets over time. Not every Chinese company obviously is a fraud that's trading in U.S. markets, but there's been a high number of fraudulent Chinese companies that traded in U.S. markets.
Is this the ticker?
Yeah,
GSX?
GSX. This is a company that Muddy Waters put out a very, very long report on months ago. The SEC actually, to their credit, did initiate an investigation, so perhaps something will come of it, but it's been very quiet. Meanwhile, the stock's ramped up 4 or 5x, and you know this company has been doing all kinds of shady stuff. And anyway, it's a long story there. We could talk more about it, but GSX is a perfect poster child of this age of like the SEC being asleep at the wheel.
So I wonder, is it that, or is it like it's just harder to go after Chinese companies and therefore that creates issues? Like what do you think the major problem is?
Yeah, I think it's both. I think it is harder because you don't have the not only physically you can't go in and raid offices necessarily, but also like you don't have as deep of access to the auditing teams, which are in different countries. You don't have access to other financial records that you might want to get your hands on. So it's definitely more difficult. But there are lots of things they could do, and they could suspend trading. They could subpoena executives, things like that. They could try to at least make the company come forward and put the burden on the company to have that burden of proof. And it's just it just seems like these things are allowed to get swept under the rug. So
Interesting.
it's frustrating.
Yeah, I know in the community, you've mentioned several times, like kind of the risk of Chinese companies, even though you've had some pretty big positions. I think in like Baidu was one.
Yeah, JD a couple years ago had a really nice win on JD, which is a legitimate, powerhouse e-commerce company in China. It's done very, very well. It was trading at a really cheap multiple back 2 years ago.
Yeah.
So Baidu is one that I've held for a while. The stock hasn't really gone anywhere since I bought it, but one that I believe is tremendously undervalued, has a lot of really interesting dynamics to it. It's basically like the Google of China.
Yeah.
But, this is a legitimate company. They operate it well, good management team. There is some actual accusations of fraud in one of its subsidiary companies, the Netflix of China, IQE, which is a publicly traded company in the U.S. under ticker symbol IQ. I don't know. I haven't looked deep enough into that issue, but Perhaps they may have also misstated some numbers about how many subscribers they had or whatever. It is a real business though. But the point is like there's just a lot happening, and not only in Chinese companies in the US, but also other companies in the US markets that have just done a lot of shady stuff. We saw with the Kodak situation. Executives have been granting themselves stock options right before major M&A announcements or major press releases. It's like clear insider trading, and no one's getting penalized for it.
Interesting. Well, we'll see where that goes in the future. I've had a lot of friends reach out like, hey man, how do I invest in China? That's like a very common theme nowadays. And it's like, well, I get the thought process there that like, this is going to be the century of China and all that stuff. But like, yeah, the fraud makes it really difficult to want to participate because there isn't the regulatory framework that we have here over there. So
yeah. And there's a weird structure with most of the Chinese companies that trade in the US have what's called a VIE structure, where they actually have a Cayman subsidiary that is they have an agreement with the actual Chinese company itself to have like economic ownership of the company. But in reality, you don't actually own the shares of the real underlying Chinese company in China, because China has regulations saying foreign investors can't own, X percentage of Chinese companies. So you really don't even own the stake that you think you own in a lot of these Chinese companies. You own a stake in a Cayman subsidiary, which has an agreement with the actual Chinese company to pass through the economics.
Strange.
Is
you could get wiped out
case?
really easily, it sounds like there.
Is that the case with Baidu and JD?
Unfortunately,
well?
yes, yeah.
Interesting.
Yeah. And so even the legitimate
A lot of people
Chinese
don't know that probably.
That's right. Yeah. And I mean, there were large, multi-billion, $100 billion ETFs that also own these companies.
Oh, yeah.
So they're exposed to this as well. And the thinking is, well, they can't just steal the company from you because there's too much at stake and, the whole US-China tensions. But we have seen some weird situations in the past. With Alibaba, they actually tried to steal Yahoo's stake in Alipay. It was a really weird situation about 5-6 years ago. They had to settle it out of court, I think. But Yahoo owned a large stake in Alibaba, and Alibaba owned Alipay, which is basically like the PayPal of China. And Alibaba Jack Ma tried to take the majority ownership of Alipay away from Alibaba shareholders. And so Yahoo was like, hey, like we own a massive stake in Alibaba. We should also own a massive stake in Alipay. And they're like, no, like this is a separate company. Like you don't own this.
Some shady stuff.
And it was really messed up.
Jesus, man.
This is like tens of billions of dollars, hundreds of billions of dollars
like
of
they
value.
wouldn't notice or like
Yeah.
they wouldn't care.
They had to come to a settlement. But yeah, so it's just the US-China thing it's really tough. I even though I own some Baidu, I find it difficult to like own a lot of China exposure. Yeah.
So I guess the thought is before you go jumping into investing in Chinese companies, know what you're getting yourself into.
Yeah.
This is kind of the main reason at one point we had an idea of actually sourcing a product out of China. And after 2 weeks of trying to work with manufacturers, I'm like, how the hell does anybody do this? Like I can tell they're trying to screw me at every single step. And unless I have boots on the ground there to defend my position, like I'm going to lose this game.
Or experience working with them and negotiating.
Yeah. Even if you have experience, like if you don't have somebody there, like with their thumb on them, like they're going to try to steal from you. Like I have a friend that has lived there for many years and he says, yeah, they have a saying, which is like, if you can cheat. Like it's part of the culture. So, I'm not judging it. It's not good. It's not bad. It's just, it is what it is. And if you're going to do business or invest over there, you should probably know these things.
Yeah. That's a great point.
Yeah. All right. So moving on. What is this? We got ChargePoint SPAC. What's the deal with this, Nick?
This is an exciting one, I think. This is basically they deal with the charging stations for EV vehicles. So they supply charging stations and essentially create the infrastructure that we need so badly if we want EV vehicles to take over, gas vehicles or combustion engine vehicles.
Which by like 2030, what was it that California said no?
California is trying to pass legislation that bans gas vehicles.
The sale of new gas vehicles beyond
vehicles.
2035.
Yes.
Yeah.
Okay. So like if you already have a gas vehicle, you can keep it. But new ones in California past 2035 can't be sold.
Yeah. I think I saw, what was it? France probably did something similar.
Yes.
Yes.
I don't know
Other
what their
countries-
timeline is, but other countries are
Other
doing
countries
that. So.
have done this. They have either they've passed the law or they're like working towards it. So it's not anything that we haven't seen before. But in the U.S., I think California is the first to try this.
Yeah.
And the concern is that other states are going to follow suit.
Yeah.
And they're going to copy them, right? And it's going to be a movement. And we need the infrastructure with the charging stations to really let this be something that we can all have EV vehicles and know that we can get across the country without being stranded in the Midwest without a charge, you know?
Right.
And, you know, this is a problem, especially, I know in cities like where we're at, condo living or city living, a lot of the charging stations that I see, they're full all the time. I can't even imagine owning an EV vehicle and, you know, knowing that I'm going to need to charge my car and I can't charge my car because I, you know, don't have a station close by that's available.
Yeah, that would be really frustrating. And I guess, I mean, if you own a home, like you can
It's
solve
different.
that problem.
Yeah.
But if you're in a downtown
City.
area, you're competing with other people.
Exactly. So this is a real problem that needs solving, I think.
Yeah.
As far as the valuation of the company, I'm going to pass that over to Travis.
Okay, so what's the deal here? So this company has been
a SPAC.
operating, and then they just
It's a SPAC. It's one of those blank check companies we've been
Yeah.
talking about that raised a bunch of money to go acquire something. And that SPAC is called Switchback Energy, ticker symbol SBE. And they just announced last week that they'll be acquiring ChargePoint, which is currently the largest EV charging station network in the US and is kind of seen as one of the leaders in that field. So Switchback announced the acquisition. The pro forma valuation at the acquisition price, I think, was around $2.5 billion. On today's price, that's probably, I think, closer to $3.5 or $4 billion or so of the implied valuation. So very high valuation considering Switchback or ChargePoint, I think, only does around $100 million of revenue currently. So pretty high valuation. But the whole idea here is that the future growth, the future total addressable market for this company is massive.
yeah.
Very massive.
If you believe in the EV penetration story, EVs are going to go from, 0.5% of all cars to, half or more of all cars in the next 2 decades, then this is a pure play bet on the growth of EV penetration over the next decade.
Yeah.
So they are the major manufacturer and installer of EV charging stations.
Yes.
Do they
Because Tesla has
manufacture
their own, right?
Yeah,
Yeah.
Tesla has their superchargers, and there are other companies that do build them as well, but ChargePoint is the largest with the largest number of existing charging locations. And they have a lot of partnerships with different companies. I mean, I think they're even partnering with some of the gas station owners who are kind of looking forward to making sure that their assets are useful, because if you're going to be transitioning to electric vehicles, the gas station owners, they want to still be able to sell Cokes and waters and candy, right? So they're going to switch from having fuel pumps or all fuel pumps to having EV charging stations there as well. So you've got partnerships with gas stations and things like that to build charging stations there. So a lot of interesting dynamics to this one.
Yeah.
It's going to be really interesting to see what happens because, when you think about we're going to have this mix of gas and EV vehicles in the world, right? Especially in the US. I mean, I think a lot of people are going to hang on to their vehicles for a while and,
become collector's
these
item.
gas stations are going to have to figure out the supply demand between, I guess they'll figure this out along the way and they can adjust along the way.
Yeah.
But yeah, it's going to be interesting to see how they deal with, okay, how many charging stations how many gas pumps do we take out and put in charging stations and figure that mix out. It's
Yeah.
going to be interesting.
It's going to be a really, I think, uneven transition to that future world.
Yeah, it feels like there's not enough. It's hard to tell what that's going to look like.
Yeah.
Yeah, and there's some problems. Like already California's grid is experiencing problems. They had to shut off power. Now, part of that is obviously because of the wildfires and that risk, but they had to shut off power to a bunch of customers this week. And the
They can't
grid
charge their
itself, yeah, I mean, and the grid itself is already experiencing problems because of the increase in wind and solar generation, which is intermittent. The wind doesn't always blow, the sun doesn't always shine. You have to store it in batteries, but there's problems with that. So the electrical grids we have across the country are going to need billions and billions, hundreds of billions of investment to be able to handle this. There's also the question of, well, what power sources are we even going to use for EV charging? Like, you can't just use all wind and solar. But if you're not using that, then are you using coal? Well, that doesn't really help us. So we're changing out gas for coal. That's not good. So
Isn't it ironic?
you need nuclear or you need natural gas-based transmission. So there's going to be these arguments going on for the next decade or two about whether or not this is something we should really aspire to, whether or not it can be done, because people are going to be like, my freedoms.
Yeah, I'll tell you this. They better figure out how to make these EV charging stations fast, because when I'm in a hurry and I have somewhere to be and I'm low on I'm on E with energy, I need to get this charged.
Yeah. I saw a picture of one of like the busier charging stations, and it was like a line. It was like 5 wide by like 100 cars deep or something. Absolutely insane.
Yeah.
Someone needs to figure out hydro fuel, how to make that more efficient and allow it to like not use as much energy. I was studying
like hydrogen.
Let
me tell you about a company that promises to do that.
Nikola. Nikola will
all you
save
got to
us.
do is start at the top of a hill and then push the car downhill.
Someone needs to figure that out, because the hydrogen fuel, it's like a gas pump. You sit there, you pump it, it's quicker. I think you can like fill up your tank in 5 minutes or something. But apparently, like when they transfer the hydrogen, it loses a bunch of energy through the process, and it's just not as efficient as the battery.
Yeah, and hydrogen tanks are super heavy because they have to be, hydrogen is incredibly explosive when it's exposed to oxygen. So
there may not be a chance for that. It's either going to be gas, or they need to just make these EV charging stations really fast.
Okay, so guys, I just have one question then. When we're looking at these SPAC charts, right? So Switchback Energy just went from $10, was not trading. They announced the acquisition, goes to $15. What do? Do we just like accumulate all these like SPAC charts and just like buy them all, and then the ones that pop are going to make a lot of money, and the ones that flatline you don't really lose anything on? What's the play here? How do we make a lot of money in these?
Apparently a SPAC is being created to invest in SPACs.
For exactly this reason.
SPACception.
It's a SPAC like fund, but they're IPOing via a SPAC to invest in the SPACs.
Yeah, it's really
it's
odd.
like a fund of funds for SPACs.
So there are a lot of hedge funds that have done this strategy actually for a number of years, which is, buy the SPACs when they IPO at $10 or $10 and change, and then hold them as a cash alternative. If the deal doesn't go through, you get most of your money back. If a great deal does happen, you can make quite a nice return. So it seems like it's an asymmetric reward to risk. Problem is, we have seen some bad SPAC deals where they do a bad deal and you actually do see the SPAC trade below the SPAC's IPO price. Now, lately, we haven't seen as much of that. So like you were saying, an interesting strategy could be to buy up some of the hotter anticipated SPACs, like the Chamath SPACs. That is already happening, though. If you look at like IPOC, and you look at Pershing's SPAC, and you look at the Jaws SPAC, and you look at a few of the hotter, more anticipated SPACs, they're already trading at, $11, $12 before a deal's been announced.
So people are already, they have the idea of front running this, using the shotgun approach.
Yep.
It's funny, like I'm thinking back to 2017 when we had the ICO boom in crypto, and it was like, you could basically just shotgun it, invest in 50 cryptos, and most of them would like go up some.
Yeah.
When I say some, I mean like several, hundreds or thousands of percentage points. It was ridiculous, right? But like to think of this, like it does seem like you said, an asymmetric bet where like, they're not going to go to zero overnight. This isn't like some shitty, scammy, crypto project.
Yeah.
It's a fund or a company that's set up to acquire stuff, and the ones that do, they can work. And if not, you have time to get out. So
yeah,
I don't know. I think the shotgun approach might work. I don't know. Maybe we should set up like a test. We'll take like $100,000, spread it between like a bunch of SPACs, and like see where we are in a year.
I don't think it's a crazy idea. And we've already done this actually with one or two SPACs like TRNE, where it worked out pretty nicely, although not as nicely as some of the other SPACs that were up 5X. But we had one there where we bet on the company pre-deal because it had a really good CEO, and we thought they would make a deal soon, and that worked. But yeah, I think there's something to it. And I am looking at some of the ones like SBE that have announced a deal where there is an interesting company there that could be a compounder over many years because of the large addressable market for something like ChargePoint, and you're betting on that EV penetration. You're also kind of betting that everyone else in the market is going to find that to be a sexy company, and they're going to bid it way up. So it's
it's like kind of in line with what happened with Tesla. It's, EV vehicle, hypey. I don't know. Maybe it could do a Tesla type move based on hopes and hopes for the future.
And it's a low float. There's not that many shares because a lot of the the stock is actually owned by existing investors and the pipe investors who will be locked up on their shares for at least a little while. So there's not that many publicly tradable shares of those things.
I don't know. I like charge point, right?
Yeah.
Charge point.
Yeah.
I was like, wait, is it charge back or charge point? Yeah, I like it. I think it's very interesting, and it's one I'll be watching for sure.
Nice. Well, next up, we got but before we talk about the NFL, can we just get a round of applause for the Tampa Bay Lightning, my favorite hockey team?
Bolts!
We got Kevin in the background. Kevin, you want to give a shout out to, I don't know who, Stamkos?
Stamkos?
Yeah, go Bolts. Go Bay.
I can't say any of the hockey players' last names. They're all like weird names that I can't pronounce.
Eastern European, Russian, Canadian, French Canadian.
But I can say Stamkos.
Yeah. So anyway, we've got the NFL. We've got some players that had positive COVID tests. I think the NHL actually handled this situation really well, where they had all the players in the playoffs in a bubble.
Yeah.
And I think they were testing them. Kevin, didn't they have like 0 positive cases?
Yeah, 0 positive cases through the whole entire playoffs.
Nice.
Wow.
Yeah.
But they were in there for 2 months, right?
Yep.
And the NBA is doing the same thing right now. They've been doing that. They're in the playoffs, right? They're actually about to go to the NBA finals. But
Yeah.
Same deal. It's pretty smart, actually. Pretty interesting.
Yeah.
So what happened here? 3 players with the Tennessee Titans tested positive. Are they in a bubble? I don't even know.
No, they're not. And they just had a game yesterday or 2 days ago. So that's the concern now, is that like they've already spread it. And so there's a lot of fear now in the market too about, do we have to shut down the NFL, which has all kinds of implications?
Oh, shit.
Because what do you do if you've got this team on your schedule? Do you call it a bye? Do you call it do we make up that game? There's so many questions here as to what happens. I know they do have some plans, but
I guess it is harder for them to do the bubble thing, right? Because when it's the playoffs, it's only 2 teams.
Well, yeah, when you have like a handful of teams, you can keep them in the same hotel.
How are you going to do that with all these NFL teams? You can't really. I mean, can you? I don't know.
when you include the number of players and coaches and assistants, it's like probably 500 to 1,000 people that are involved in that.
Yeah.
Maybe more. So
Bubble communities. I don't know. Maybe we need to start bubble communities.
Yeah. Okay, next up we got, what was this article, Nick? You wanted to share this.
This was a survey that was done basically talking about like the financial health and
how will the coronavirus impact your finances?
Yeah, and what people feel about like the future. And I think the stat was like 83% of people felt positive about their financial future. And people that were financially savvy and had a financial plan before the coronavirus, they actually increased and felt more financially savvy from the pandemic. And the exact opposite for others. For people that didn't have a plan, they didn't really know kind of what they were doing with their finances. They were aware, but didn't have a plan. They feel less confident in their financial situation. So
I guess I can see that. People that had saved and had an emergency fund and had like kind of the basic structure, they're like, this pandemic happened.
it boosted
my
their
preparation,
confidence.
my preparation paid off, kind of thing.
I think so. I think that has a lot to do with it. And the percentage of people that did have a financial plan was still a small percentage. I think it was like less than 25% of people had a financial plan and felt financially savvy.
So people need to reach out to you.
So that was a bit disappointing.
Yeah.
We really need to get that number up and get more people feeling confident about their ability to create a financial plan for themselves. But it just goes to show you how, the bifurcation that we're seeing with the haves and the have-nots right now, it has a lot to do also with how people feel about their finances. People that feel more confident and better, they're becoming better and better and better, even through a pandemic. And then people that don't have that confidence, they're sliding behind. And I think it's just so important that people that don't have that confidence seek it, find it, do what you got to do, because it's, obviously this is a small sample size. Surveys are controversial because people are like, oh, it's just, so many people. But it's something that kind of gives us some insight into how people are feeling and thinking. And so, I thought it was just an interesting survey.
Nothing like pointing out the importance of having a financial plan and financial independence than a pandemic, right? And like, we know people that have been laid off and that have gone through really tough times, and like, we feel for those people. And I agree. I think, financial education is so important. I mean, that's the whole point of this damn show, is to try to help people, get their stuff in order, learn how to be better investors. And it's good to see that people that did prepare are feeling confident.
And a lot of people feel confident about their financial future. They at least feel positive about it in some capacity.
Nice.
So, but that, I'm sure there's still a lot of people that don't feel that way, but in this case.
Yeah. Next up, we've got an article, or I guess this is more of a press release from Coinbase that came out 2 days ago, where Brian Armstrong came out and basically said, look, politics and, this infighting, this division that we have, has no place in our company. We're going to stay mission focused. And this just lit a fire on a lot of people, on both sides, saying, I'm angry. You should be outraged. You should be standing up for all these social issues. And then other people are like, look, you guys are a for-profit company. You're in finance. You have no business being political anyway. What do you guys make of this?
I don't see why people would be angry about Coinbase coming out with this piece. I think that in today's climate, it's very inflammatory. You can easily upset people. People are defriending people for their political views. And when you think about that in terms of like in the workplace, you need people to collaborate. You need people to get along. And if people realize that you don't support their cause, or you don't, whatever, you're voting for this side or that side, and they don't like you, you have to be able to get along and collaborate for the mission, for the purpose of why you're there to work. So I think that it's not necessarily a bad thing that Coinbase is saying, hey, leave politics out of it. Let's just get these jobs done. And
let's get to work.
Yeah.
What do you think, Trav?
I agree. It's hard enough to run a business. And if you're in certain types of businesses, like if you're Facebook or Twitter, you almost have to come out and take a stance, because you have to deal with things like censorship. You have to come up with sensible policies for how you're going to take certain types of content down, and where and when and why. But for lots of other businesses, it's like I said, it's hard enough to run a business, and you've got all this other, strong political opinions on both sides, or different opinions on different issues, and it can be a distraction when you're trying to run a business, especially one that's a startup that has a really strong mission. And I think they're just trying to say, listen, we're trying to stay focused on our mission. We're trying to make sure that we can achieve that mission over the next decade or two, and we don't want there to be all this other stuff complicating the picture. And so it's fine. If every company did this, and there was no ability to stand up for social justice at any forum, then that would probably be a problem. But I think this is okay. It's their right to do that. I don't know why people would be so upset on Twitter about this. Not every company has to come out and take a stance on every damn issue.
Yeah. Especially with cancel culture being as strong as it is, you almost are afraid to say anything.
Yeah. I mean, living in this age of like outrage culture, it's almost like if you're not outraged, if you're not showing and posturing that you're pissed off all the time, you're a terrible person. It's like, well, what if you're trying to run a company and manage a lot of employees? What's the best way to do that other than saying like, look, we won't in our company debate political candidates internally. We won't put our personal beliefs out there. We won't assume negative intent or not having each other's back, right? Like, I think this is totally reasonable. And again, I'm sure there's somebody listening to this right now pissed off saying, oh, you are not outraged enough, right? You're a terrible person because you're not angry enough. I don't know. I agree with you guys. I don't think that should necessarily have a place in every company.
Yeah, I agree. And these employees can do whatever they want to do on their own time.
Yeah.
There's still that option. And there are ways that they could organize together outside the company and do things together. That's totally fine.
Yeah.
And I'm sure the shit will still get talked about in the workplace.
Yeah, exactly.
But this is just them taking their stance that, hey, we're, trying to keep things civil.
Yep. Absolutely.
It's
all right.
like you don't talk politics at the Thanksgiving table, and it's the same thing.
Yeah. What are the three? Politics, religion, and money. I think we're kind of weird though. We'll talk about money
talk about
anywhere.
money.
Yeah, all the time.
Yeah,
I love talking
I
about
mean,
money.
isn't that's the name of our show,
probably
right?
too
Yeah.
much.
All right, so let's jump into some Q&A. First one from Kieran. Here she is asking about, basically the difference between high tax states and low tax states. I guess the assumption is that in higher tax states, you get more services, more job opportunities, versus lower tax states where you get less. Honest question, I can't stop thinking about this in the Rona world. I don't necessarily agree with the assumption that you get more in high tax states.
I agree.
Look at what happened in California. Right now, we're seeing a mass exodus of entrepreneurs and investors. Anybody that can look at the issues they're having, even Tim Draper. I tweeted this the other day. Tim Draper says that in California, we pay the most and get the least. And that makes a lot of sense. So I don't know. What do you guys think about this? High tax versus low tax states.
Yeah, I think the general sentiment is when you look at countries like Canada or Sweden, places like that really provide a lot in terms of social services, it does pose the question, well, why wouldn't we want a society with 50% income tax if we also get, healthcare and education and a social safety net? And I kind of agree with that. I would be willing to give up more of my taxes for a system that actually works. The problem here in the U.S. seems to be that even when we do pay higher taxes, it doesn't seem to translate to better services or better benefits in many cases.
Yeah.
Now, that's not true everywhere, but certainly seems like there's been misallocation of resources in many ways. And you have this, I think part of it's the political fighting that happens where, one party does something and then the other party tries to unwind it as soon as they get into power. And so we end up with these weird systems with weird incentives, like our healthcare system. And so I just don't know if what we have now, if higher taxes is necessarily the answer. I would like to see just more sensible structuring of a lot of these programs that we already have to try to figure out how can we provide more with less. But maybe that's a pipe dream. I don't know.
That's the goal. But unfortunately, in today's world, with being so politically divided, it doesn't seem like we're getting anywhere, right? So raising taxes, to your point, it's like, yeah, raise them, but are they actually going to do something productive with it?
Yeah.
Or should you rely on capitalism and, the private markets to actually provide this stuff? I don't think there's an easy answer. I don't think I have the answer. But
And also you have to drill down to the city, right? Like when you're paying your city taxes, property taxes. So, I would say that high tax versus low tax state it doesn't make it or break it. You can still have opportunities and services in a state like Florida or a state like Texas that doesn't have state tax at all. And you still get, your roads are still taken care of and you still have unemployment services and whatever other things. But I think that you have to also drill down to the city.
Right. And look at other things like sales tax and property tax. So like one thing that, people don't think about with Texas, I know a lot of people are flooding here. We have some of the highest property taxes in the nation.
Yeah, it's outrageous.
Yeah. So like, and property values here in Austin have been going up insane over the past 10 years. And people don't think about like, you pay your property taxes every year, no matter how much your income fluctuates. In a state with state income tax, if you have a low income year, you might pay little or nothing. But with property taxes, that number is only ever going to go up over time. So keep that in mind too. Next question, Michelle asks, I'm new to investing. There's been so much uncertainty this year, but the rise of inflation seems to make it sound like it's bound to happen. So basically, how can I protect myself against changes in inflation? What are reasonable and safe investments during this time of impending inflation? Currently, I'm an hourly worker and my take-home pay typically fluctuates every week, but I'm looking to build wealth. First of all, Michelle, I congratulate you on thinking this way, right? Trying to protect the downside, understanding and acknowledging that your income fluctuates and you're still trying to build wealth. Awesome. So, Nikki, why don't you take this one?
I think Trav and I can both kind of take this.
Yeah.
yes, this is something looming on everybody's mind right now, how to protect against inflation.
Well, Trav, let me ask you, is impending inflation a guarantee? Are we going to see inflation in the short term?
Really hard question.
That is the question, isn't it?
If we nail the answer, everyone here and everyone listening will be very wealthy.
Yeah.
You know, I'll say this. I've been trying to figure out this puzzle because it is so important. And I do have Bitcoin and a little bit of gold. I should probably have more. I do think when we look over a 5 or 10 year time frame, we are likely to get more inflation than less. In the short run, I'm not sure. And that's why I think we've seen gold pull back. It's because, you know, we're getting, depending on who we get in this next election too here in the US, I think will make a big difference. Biden wants to raise taxes, which is actually disinflationary, but he wants to spend a lot of money on new programs for green energy and all these other things, which would be inflationary, which would increase the fiscal deficit. So I don't know right now where that shakes out exactly. We also don't know if they're going to get a sweep of the House and the Senate to be able to enact those programs. And then if Trump gets elected, you know, they've got a whole different set of spending guidelines. And I'm not even sure we really understand what that looks like beyond the next year in terms of their programs that they want to actually get done. So really murky right now. A lot of puts and takes on the inflation front. Bonds are saying no inflation because the government can borrow money for 30 years at under 2%. So right now the market's saying we're not too worried about inflation, but I do think the MMT experiment that you talked about last week is going to be tried in the next 5 or 10 years in this country and probably other countries.
Yeah. I think I put this in the category, the way that I think about it is I'm not going to try to guess what's going to happen. I know the narratives on both sides, right? Like I'm in the crypto community. I've been around gold bugs and hardline crypto guys for a decade or more now. Instead of trying to guess if and when it's going to happen, let's just protect against it now by having hedges like Bitcoin, gold, property, physical assets, right?
Yeah.
Understand the risks of the stock market, participate in the stock market, but understand how to be tactical about it. And yeah, I don't know. I guess on kind of a fundamental, like personal finance level, it's like get that piece in place, get a financial plan, get your savings, you know, your emergency savings, get your business structure, maximize tax savings, get the right types of insurance, right? Get all the basics and then be tactical with your investing and don't try to predict if and when inflation's going to hit, but have a plan for no matter what happens.
Yeah. Yeah. If you're 100% in, you know, inflationary type assets or assets that will only benefit from really, really high inflation, then I'm not sure that's necessarily the right bet, you know, because you have to be right, like you said.
Yeah.
But I do like assets like Bitcoin because fixed supply, you know, look, we're probably going to get 1% to 2% inflation no matter what, no matter who we get in office and no matter what spending plans happen, because the government's almost certainly going to run deficits at some level. So, you know, in your base case, you have like at least a better asset than just sitting in cash or cash under your mattress.
Yeah.
You know?
Yeah.
And then in an upside case, if you do get higher than expected inflation over the next few years or few decades, then you've got an asset that can really perform really nicely. So that's why I love having something like Bitcoin in the portfolio alongside stocks, which can also grow in a lot of different environments.
Yeah.
Yeah. I also think, I mean, you know, when we're thinking about like risk to reward on investments, you also have to think about the risk with cash, right? Like I have a friend that literally had like 50 to 100K in cash under his mattress just because he thought that was the responsible thing to do. And I had to explain like, look, dude, every year, you know, imagine if you had to light like 2 to 4% of that on fire. That's what holding cash is like you're literally guaranteed to lose purchasing power over time. You want cash as a buffer, but that shouldn't be your main asset, right? Bitcoin is great. It's the best performing asset. It's made me wealthy. I love Bitcoin, but you have to understand the volatility that comes with it. It's not a risk-free asset. So you have to take that into consideration and make sure you're not going to panic when the market crashes, as it does at least once a year, right? Those are good buying opportunities.
That's a great point.
Yeah, I mean, this is the reason why we invest is to try to beat inflation, right? So just having a diversified portfolio, as much as we harp on that, but having some equities, having some Bitcoin, having a little bit of gold, having some cash set aside for your emergency fund, and then just having that pie of different assets. That's why we invest, to try to beat inflation. So it's smart that you want to do something, but sometimes I think people overthink it too.
Yeah. I mean, and it's easy to do that, right? Because the mentality is, well, I have to figure out what's going to happen, and I have to predict and then guess and then be right or wrong. It's not binary like that.
No, you don't. Just be invested, have a diversified portfolio, and things you'll have the give and take along the way, right?
And you'll be able to adjust along the way,
Yeah,
too.
and you can adjust along
Adjust
the
your
way.
allocations along the way.
If interest rates rise, guess what? Maybe you can get some risk-free return with being in a bond or in a high-yield savings account again, and you can kind of take some of that risk off the table. No yield? Okay, we got to go into equities, you adjust along the way, but be open.
Personally, I think people need to spend less time trying to guess what markets are going to do or what the macro picture is going to look like, and focus on their personal income, right? Like this is kind of like my life philosophy, is like learn skills, grow your income, maximize that cash flow, and then take that and invest it wisely, right? But everybody's like trying to focus, like this whole generation of like Robin Hood, like I'm going to either get rich quick or I'm going to die trying, right? Almost everybody dies trying, but you only hear about the ones that make it big, right? Instead, why not build a business? Why not put your capital, your cash flow to productive use, right? Like the best return that I get outside of Bitcoin is in my own businesses, right? So like I would, have a suggestion for Michelle, like focus on that part where you say, I'm an hourly worker and my take home pay fluctuates. Put a lot of effort there. What can you do to maximize your monthly take home and also reduce spending so you maximize that monthly cash flow that you can then use to build wealth?
Absolutely.
Yeah. All right.
Okay.
Last question. What stock tickers outside of the most publicly known ones give you guys the most gains? So basically,
I don't know. They got to be publicly known to give us gains.
Yeah. And what are the ones that you're most bullish on? So what are the little known things that are going to have the biggest gains, I guess?
I feel like we do talk about some lesser known stocks, especially in our community. My style tends to favor some of the lesser known companies that I think will grow to be bigger, or at least be more highly valued. Like I don't typically spend my time looking at Tesla or stocks like that very much, but we actually initiated a couple positions this week in some companies that a lot of people probably haven't ever heard of. We also talked about SBE earlier, which is going to become ChargePoint, and that's one I would say is still probably flying under most people's radar.
Yeah.
So those are a few, but
that is the strategy, right? Is like finding the sleeping giants, not chasing what's at the top of the news article headlines every day.
I guess I read that as it's not very publicly known, but it's also gained. I was reading it as both.
Oh,
so
yeah.
like think
like
about
past
one that's
gains?
like it wasn't publicly known, but it gave a big return.
Ooh, good question, I guess. Yeah, I mean, I've had a number of those over the years. CEQP is a great example. No one probably knows that company outside
that was
of
a good one.
people involved in energy. So Crestwood Equity Partners was an oil and gas MLP. And in 2015, 2016, I had more than a triple on that. Bought that really near the bottom during the blood of the MLP sell-off. We actually got another MLP sell-off this year, but I didn't really.
This thing is wildly volatile. So I think we were talking about this in the past. So back here in 2016, you bought and then had a double or a triple.
Yeah, about a triple plus earned some dividends on it on the way. So yeah, more than a 200% gain in that one. And that was just a situation where I saw a really interesting company that had hard assets in pipeline and transport infrastructure in oil and gas. And it had sold off 90+%. They had a great management team. The management team was buying the stock, was able to buy it at, sub $10 a share. The thing went to over $30 a share within about a year and a half. So it was a nice win, but not one that most people probably ever heard of. Yeah.
So what's that now, I think is the question. What's like the not known stock?
Yeah, what's the sleeping giant that somebody can get really rich on?
Sleeping giant.
Why don't you join our community and find out? I don't give all my stock picks away for free.
Yeah.
He just released a few things.
Yeah, I had a couple new positions this week that I would characterize pretty much all of those as positions that are flying under the radar, that are not the hot momentum tech stocks of the moment, but stocks I think are incredibly undervalued, and I believe will probably be 2 to 3x type of returns in the next 18 to 24 months, hopefully. So yeah.
We'll link up your hedge fund playbook to kind of give some, I guess, 30,000 foot overview of how you think about finding these types of deals. Cause I think the mental model of like how you look for deals is super interesting. It's kind of the way I think about crypto, right? Is like finding the early projects that have really big potential that aren't like blatant scams, right? And you know, the earlier you are, the higher that initial risk is, but also the higher the potential gains are. But if you're constantly chasing like the Teslas or the Apples or the Googles of the world, you're competing against high frequency algorithms, big billion-dollar funds, right? Like to be able to find alpha and that type of stuff is a lot harder than it is to do the early work, I think.
Those opportunities just come very seldomly, and you have to know when to pounce on them.
True.
Yep. That's right.
Because that's what I did with Apple. I mean, I'm up over 100% on Apple.
Yeah.
Which is
buy
crazy
it right.
within a year, which is nuts. It's Apple. But if you know when to pull the trigger on certain opportunities, even big no names, you can.
Very
It
true.
can happen.
Very true.
Yeah.
Even I guess you got Square early.
Yeah, but I bought it again in March. I added to my position in March.
That's right. We both did.
And that was a well-known name. I freaking sat and waited forever for another opportunity to buy Square.
So you bought on the March panic?
Yeah.
So I
we
know
bought way back there,
initially
too.
you got in at like $9 after the IPO.
Yeah.
Went crazy for a while. Oh, this is a log chart.
But
by
the
way.
point is large companies, there are opportunities to take advantage of, even in larger, well-known companies.
Yeah. Good point.
You just have to know when and how, and
I mean,
be prepared.
On my YouTube channel this year, a prime example, I just released an update video on one of my positions last week, Macerich, which is a real estate investment trust that owns high-quality shopping centers in the U.S. And most people probably don't know this company. They don't know what they do or what they own. But this is one I still think probably has 3x type of upside. Go to the channel, watch my videos on it if you want to hear the full thesis. But this is pretty unloved. And that's one of the things that you often have to do with under the radar stocks is experience not only corrections and drawdowns, but people saying, oh, you're dumb, just go buy Tesla. Tesla's killing it.
Yeah.
And you're buying stocks like this that no one's ever heard of, that no one seems to be hot on. Well, let's talk again in 12 to 18 months and see where we're at.
Such a great example. This is the great example of that.
Yeah.
Under the radar, big gainer potential.
Yeah, this one hasn't played out yet.
Love you. So all we need to do is just fast forward 18 months to see where this is at.
I hope it works out.
We'll put a note in the calendar, and we'll have to come back and see where it is.
I just want to say too, remember that position sizing is key, because I could be wrong on this.
Wait,
there is a small chance that this doesn't play out the way that I think it will. I've done a lot of work on this, a lot of homework, and I'm pretty confident in my position, but it's not 100% of my portfolio.
So I shouldn't have sold my future children for to leverage this position.
Oh man.
We didn't even get to talk about augmented reality today.
Let's talk about it real quick.
Well,
What are
we've
you
been
excited?
going a long time.
Let's talk about it, and then we'll wrap up.
Well, I'm interested in it. I want a pure play augmented reality investment.
Yeah.
And
Is there anything out there that's
That's
exciting
my question
right now?
for Travis.
So there are some companies that make some of the like sensors or lasers behind some of the AR type of hardware.
I'm more interested in the software side.
Yeah.
Because I actually think that augmented reality is the future of retail.
Interesting.
Yeah.
Explain.
I do. Literally, there are a few, and I'm invested in Pinterest. Pinterest and Ulta have incorporated augmented reality with beauty, trying on lipsticks and makeup and stuff before you buy. I've tried it. It's incredible. Etsy, which is a publicly traded company, they've implemented augmented reality into buying like pieces of art where you can take a picture or scan your wall and it pops the picture up. I tested this. I bought the picture, brought it home, put it on the wall, looked exactly like it did in the damn scanner thing.
Nice.
I just think that is the future of buying decisions.
So I did that on Amazon the other day. I was like, I have a 75-inch TV now. Should I get an 85-inch TV? And then I went on there and they're like, oh, try it on in your room. And I did the thing and I put it over the TV and like it did. It looked amazing. Like the technology, I guess, is there.
And I'm trying to understand a little bit more about the technology behind that. Like what gets you from taking a picture on your phone to it being, projecting the image into your camera.
Yeah.
And that's the software side from what I believe. And
let's see if Kevin has any thoughts. Yeah. Kevin, what's the future of AR, bro?
They're developing a lot of technology for it now. We'll probably see an advent of consumer electronics here in the next year or two.
All right. Well, there you hear.
You know
it.
any companies?
Well, Magic Leap is private. I'm kind of waiting to see who ends up buying them because they've raised way too much capital. Maybe a SPAC will actually take them public.
I think a lot of these companies are private.
Yeah.
And that's part of the issue. I mean, Apple and Google have their own products and software for developers and stuff, which is big, which is great for Apple, I guess. And everything I was reading was like Apple. If you want to get into the AR game, I think Tim Cook's been pretty vocal about being interested in AR and his enthusiasm for the future of it. So I own Apple, so I guess that's being invested.
Do you know who's actually also a huge player in AR? Snapchat.
Yes, I was gonna bring that up.
Yeah.
And I am now interested in digging into Snapchat more. Before I was like, oh, they're a washed up social, platform that eventually TikTok and Instagram is going to kill them.
Their chart's actually been ramping up too. It's back at IPO levels.
But I think they are really going for that AR angle and trying to. I mean, I need to read up more about it.
Which, by the way, Trav actually bought me a pair of the
spectacles.
The spectacles, the first one.
Yeah, those were a flop though. I think
they were
ride
super
off
hot.
A bunch of them.
I'm keeping those forever though. I think those are going to be an antique one day worth several dozens of dollars.
That'd be cool to see it play out. So Snap, you're right though. Today the business model is all about the social network and selling ads on Snapchat, and so to buy the stock today, that's what you're really getting exposed to, and maybe a little bit of this option value in the AR technology. But what I'm interested to see is what can they do with a lot of this AR software and the AR kit that they built. Can they go after retail in some way? Can they sell it or license it and earn money from that? Right now, there's not much of that happening. So I don't know. If you were to buy the stock today, I'm not really sure you would get the exposure that you're looking for in AR, even though they are doing some fascinating stuff with it. But, I guess I want to see more from Snapchat about how they can monetize the AR assets over time.
Yeah. Okay. Well, I'll be going down that rabbit hole over the next few months, probably.
I'm sure Kevin will be happy to guide the way for you too. Awesome. All right, guys. Well, I guess we could wrap it up there. Covered a lot of stuff today.
Good ground, yeah.
Yeah, man. I guess just to wrap it up, talking about the markets, I mean, everything is basically at the same levels that we talked about last week. Stocks, crypto, gold, everything's been basing around support. So nothing real major to talk about as far as like price changes over the past week, but we've got positions. I'm obviously long Bitcoin and several other cryptos, gold, stocks. Yeah, I don't know.
We're long everything up in here.
Stonks. I got my hedges though.
Yeah,
my hedges.
Yeah, you got. Well, no, I mean, like we got between all of us, we're diversified.
We're covering the asset classes.
Yes, awesome. All right, guys. Well, thanks for watching. Go to www.wetalkmoney.com. Shoot a question in.
Submit your question.
Yeah. Subscribe on YouTube, on the podcast as well, iTunes, Spotify, wherever you listen to your podcast at. And hopefully you guys got video. Hopefully you guys got value from this. I know we went a little long today, but thanks for watching. See ya.
See you next time.